Okay, well, welcome everybody. I want to thank you for taking the time to sit through this session with us, and we're going to be talking about business taxes. And we have Dorcas here that is going to be having more of the conversation because I'm a lawyer, not an accountant, so I'm not as well versed with a lot of the numbers things. I want to thank you for taking the time for speaking with us. You know, this is going to be valuable information for the participants, for the members, even with the replays. And, you know, tax season is upon us. So this is a beautiful time to be having these discussions. But if you can first and foremost, let us know who you are, give us a brief introduction about your background, your business, and how people can get in contact with you as well after we have this session.
Yes, ma'am. So my name is Dorcas Fulton, as you may be able to see on the screen. My background is I have been in the financial industry since I was 16 years old. Started out as a cashier, went into bookkeeping for a company. Then I went back into bookkeeping for another company and accounting for another company. And then I ended up, this has just been my niche since I was like 16. So I've been in the industry for like 10 years. I've been doing taxes for individuals and businesses for about 5 years now. I started my business, Top Tier Financial and Business Solutions, in 2019. And it was mainly because I was tired of seeing business owners being taken advantage of. So I was like, you know what, let me hop in. Let me give y'all the real game. Let me break these myths and let me tell y'all how business actually works, how the back end of your business actually works. So essentially, that is my business. I help simplify the lives of business owners through financial and business support services that consist of bookkeeping, notary services, financial services, as well as taxes and business structuring. But you can reach me at toptierfbs.com on all social media platforms as Top Tier FBS. Made it simple and clean for y'all because it is kind of a long name. If you want, you can text me at 919-412-0122. Just text me tax or business, and I will send my consultation link. Right now, all of my consultations are free for the tax season, and I know people want to start businesses, so for the entire tax season, I'm doing free consultations. But that's a little bit about me.
Awesome. Well, thank you for that. And as always, if during this session, in the middle of the session, or after the session, you have found anything of value, if you can give the video a like, which will be helpful for myself. If you can subscribe to the channel, because this is going to be a 4-part, possibly 5-part series on business taxes. So if you can do that, and then also leave us a comment. If you have questions, I'm definitely going to put her information in the description box, in the comment box, in case you weren't able to catch that. We'll mention it again at the end as well. But I do like reading the comments. It kind of motivates me to make sure that I'm on track with the channel and giving you all the content that you actually want versus what I think that you want. So it makes it more of a family versus me just talking to my camera and hoping that somebody is getting something of value. So to start off, if you can just give us a general overview of you're trying to get your taxes done, but maybe you're a sole proprietor or you're an LLC, and you know the thing where everybody is like, oh, I'm an S corp, if we can talk about that a little bit, and then you know a C corp, all of that in a nutshell, so people can understand it just a smidget better before they even get ready to get their taxes done.
Yes, ma'am, I can. So I don't know if I can break it down to a smidget, but we're going to try today.
Okay.
We are definitely going to try. So the first step, honestly, is understanding your business structure and how the tax implications are, or your taxes are with that business structure. So as a sole proprietorship and as a limited liability company, you're automatically structured as a disregarded entity, meaning it's still a business structure, but you're still one and the same when it comes to the government. So they're taxing you with pass-through taxes. That means that you're going to file a Schedule C on your business, depending on the type of business, because some businesses do have to file different forms. You're going to file a Schedule C for your business. That Schedule C is going to include all of your profits, all of your expenses, your cost of goods sold, if a vehicle is involved in your business. It's going to include all of that. Then it's going to come down to your net profit or loss. This is where the pass-through comes in. So the pass-through is whatever your net profit or loss is in your business, that's going to pass through to your personal taxes, meaning your profit or loss, let's say you have a net profit of $50,000. That's going to be considered as individual income for your personal taxes. Same thing if it's a net loss. If you have a net loss of $50,000, that's going to be passed through to your personal taxes, and you're going to have a lower taxable income because you made a loss of $50,000. So that's in a gist what an LLC and a sole proprietorship, how they're taxed.
Now, what if I don't want it to pass through, though, to my personal taxes? Is it a way that I could avoid that happening?
There is a way, but there are certain things that need to be in place before you move on to that type of way. Okay. So the different tax identities that you can claim as an LLC are an S Corp or a C Corporation tax identity. These are only tax identities. These are not actual business structures. Let me just clarify that, because a lot of people get it confused that it's always LLC versus S Corp, when you can actually be an LLC with an S Corp tax identity. Your business structure doesn't change. It's just a tax identity. So really the only time that you should switch over to an S Corporation tax identity is when you hit $50,000 in net profit. So what is that profit? That means all of the money. I tend to throw stuff out there and it's like, I don't really understand what that means. So net profit is, and yes, I talk with my hands, so don't mind me.
I do too, it's fine.
So net profit is the amount of money that you have left over after all of your expenses. Okay. All of your expenses, all of the things that you have to pay for on a monthly basis, all of the things you have to pay for on a yearly basis, and you subtract this amount from your gross revenue. Your gross revenue is all of the money that you already bring in. Okay. So whenever you reach 50K in net profit, that's actually when it will benefit you to select S Corp tax identity. Because as an S Corporation, instead of paying yourself as the owner as you would with an LLC or a sole proprietorship, where you would just do transfers or you would write yourself a check, now you're paying yourself as an employee. So the benefit of that, is that your business is paying your employment taxes. And now you're paying employee taxes. So instead of paying that huge lump sum of like 25 to 30%, now you're only paying half of it.
Okay, so let's make sure we got this. So if I made $100,000 and then I have $50,000 in expenses and whatever, right? And then I'm gonna put $50,000 in my pocket. Now I can be an S Corp, or it would be beneficial to be an S Corp.
S Corp.
Okay, so can somebody, even if it doesn't make sense, could somebody potentially elect to be an S Corp and you've only brought back $20,000?
Yep. So the IRS doesn't actually put a financial stamp on when you can select S Corp. You can literally select S Corp while you're filing for your LLC. There's really no stopping ground, no starting point or ending point. It's just most accountants, most financial advisors, most business developers or strategists will advise you to not select the S Corp unless you know for a fact that you're going to create that revenue. And that is because it doesn't really benefit you until you reach that amount of revenue. Because you also have to remember, whenever you select S Corp, you have to pay yourself as an employee. Now, in the event you're not paying yourself at all and you don't want to pay yourself, then select S Corp from the beginning. But if this is your only source of income, you're going to have to eventually pay yourself out of this income unless you have a large lump sum of savings. And then you can lost my train of thought. Then you can don't have to worry about S Corp at the very beginning.
Okay. So can you select it in the middle? So whenever I get ready to do my taxes and I realize I got this $50,000, can I then say, I know I didn't say it at the beginning. I didn't think I was going to make this amount of money. and now I have, could you then elect S Corp, or would that be a problem because I probably wasn't paying myself throughout that year?
If you were not paying yourself throughout the year, yes, you can select S Corp while you file your taxes. If you were paying yourself and you're paying yourself like through owner's transfers, if you're paying yourself through cutting yourself a check, then I would highly recommend waiting until that next year to file, because it can be a proactive filing. So say for instance, you file your taxes for 2021, but in 2021, you were paying yourself as an LLC business owner, right? Okay. So if you're paying yourself as the LLC or sole proprietorship business owner, you're not creating that employee ownership relationship. Now you're just the owner. But whenever you have an S Corp, you're technically no longer the owner of the business when it comes to taxes. You're now an employee of the company.
Gotcha. And this is just an aside. We don't need to go down this rabbit hole at all, but I'm just going to throw the question out there for now. So if I'm now paying myself as an employee, that would then trigger workers' comp insurance and those types of things as well. So would I come out ahead if my insurance is going to cost me more than if I wasn't considered an employee?
The good thing about it is that there are tax credits available for whenever you create health insurance, whenever you create retirement plans for employees. So if you're putting yourself on the medical plan, on a healthcare plan, or retirement plan that you created through your business, then you'll get credits, even though you do have to pay those expenses. Trust me, there's loopholes everywhere. But even if you have to pay those expenses, you still come out on top because of the amount of tax savings that you get. Plus, with the S Corp or C Corp, you get to pay yourself through dividends, which are taxed at a lower rate.
Got it. Okay. Because I'm like, somebody might be wondering, because like now, if I injure myself at my job, I'm going to sue my job. Workers' comp. Yeah. Okay. So earlier you talked about being a disregarded entity. What exactly does that mean? Why does the IRS use that term?
Because being a single member LLC, essentially, the LLC whenever the business structure is what actually separates you from being the actual business owner. It separates you from the business, essentially, the LLC does. But in the IRS eyes, and I keep going back to that because there's two different people actually looking at your business. So you have the state, of course the government is looking at it, but they're more looking at the back end of it. So you have the state and then you have the federal government. So the federal government is looking at your business as far as taxes goes. So you have the IRS looking at it as a disregarded entity because as a single member LLC, you're still the owner of it. You're still running things to the federal government. So you're still, quote unquote, the owner of the business. So essentially it's yours. Okay. So it's a separation, but you're still there.
Got it.
Okay. That's why it's considered a disregarded entity.
Got it. Because although it's an entity, a separate entity, all of the benefits are disregarded because I'm still the person that's essentially running everything versus if I made it to that S Corp level, or if I just had employees under my LLC without having this S Corp selection. Is that what we're saying? Okay. Yeah. So what about if, I doubt people will be at this space, but if somebody wanted to be a corporation, what does that look like when it comes to taxes? Because I know what it looks like from a legal lens, and it's a lot of compliance which is why most people choose LLC. It's quick, it's perpetual. You don't have to worry about any of these documents in some states, because I know some states you still have to do annual filings. In Missouri, you don't. You just file it and it's there forever, unless you're administratively dissolved for not doing something. And normally it's because of either your address a registered agent. But if I then decide that, you know what, I don't want an LLC, I want a corporation and go through, the bylaws and shareholders and all of that, what does that look like from a tax lens?
Essentially, the tax identity, whenever you become a corporation, the tax identity is then in turn turned into, by default, a C Corp. Okay. The C Corp is a double tax identity, meaning that the business is taxed and the individuals are taxed. And when I say individuals are taxed, they're still being paid as employees, but the business pays the taxes on their employer portion, and then the employee pays the taxes on their individual portions. And you still get dividends as shareholders and so on and so forth. But the difference between the S Corp and the C Corp is the C Corp is a double tax identity and the S Corp is a single tax identity. But what most people don't realize is that people are more apt to buy into C corporations because there are no limitations on it. That means that there's enough, you can have multiple shareholders in it. You can have, anyone can create a corporation and be taxed as a C Corp. Whereas the S Corp tax identity, there are restrictions to it. You have to be a citizen. You can't have any more than 100 shareholders in order to choose this tax identity. And it just really depends on what you're trying to do with your business as far as which tax identity to choose, because sometimes S Corp is not always the right way to go. Sometimes C Corp is. But if someone were to do the corporation as far as the tax identity goes, it would just be double tax. The same exact thing as the S Corp, is just that it's double tax.
Okay. So if somebody was thinking about, LLC choosing the S Corp designation versus just incorporating as a corporation, what's one thing that they should consider before selecting a corporation over an LLC from the accounting perspective?
First, figure out what their goals are for their business and what can they do at the very beginning of their business.
Okay.
So, for instance, if you know for a fact that you're going to be grinding, that you're really going to be making the money, you really want this type of business, you really want to make this into a long-term situation, a long-term business. As far as your tax identities, whether choosing self-employment and S Corp or C Corp, if you know this is long-term, you're going to be making the money, you're going to be pushing to make the money, you're going to be grinding, you're going to be hustling to make it all work, then you can go ahead and choose S Corp from the fruition of your business.
Okay.
If you know that you're going to be stumbling along the way, you're not certain about this business, you don't really know what you want to do with the business, I would say choose self-employment for the LLC first. That, and because you can always switch over to a corporation or to S Corp. So as far as the tax perspective, think about what you plan on doing with the business before actually jumping into S Corp or C Corp tax identity, because self-employment is beneficial when you're first starting out. You really don't understand what S Corp or C Corp is, and you're just starting out and it's just like a side hustle on the side and you're not really making any money from it. You just wanted to build something just to build it at that moment in time.
Okay. And then a follow-up question to that. Let's say I start off as an LLC and, the money's coming in. I'm like, you know what? I need this double taxation to happen for me right now. Legal side, you just file an amendment to transition from an LLC to a corporation. Is it difficult if, year one, I did my taxes as an LLC with the self-taxation, but then self-employment tax, then year two, I've amended my LLCs to be a corporation, and now I'm doing my taxes as a corporation. Does the LLC year one follow to year two, or would it be difficult for an accountant? Just help me, because I don't know.
No, as long as the accountant is familiar with corporation taxes. Usually if an accountant is familiar with corporation taxes, they're familiar with self-employment taxes, because that's kind of like the first step that you go into. Then you start learning corporation taxes.
Okay.
But as long as they're familiar with corporation taxation, then they should be perfectly fine. The switchover is really where you file to change your tax identity. And then once it's accepted, you would just file different forms. That's the only difference, really. It's a little bit more particular whenever you do the corporation taxes. But as long as you have your documents together and you hire the right person, you're good to go.
So when you say it gets accepted, are you saying that if I go from an LLC to a corporation, the IRS has to say yes first before I file my taxes, or do I file my taxes and then they say yes? Or, yeah. What is that?
Essentially, it has to be accepted, but most people like, here go my paperwork. I'm this is what I am. That's it. That's all.
Okay.
That's usually how it works. It does have to be accepted by the IRS, but usually you are accepted by the IRS.
Okay. Because that was what I was thinking. Would it be an instance where, I didn't do whatever this first step is to get accepted, and then I just filed my taxes, and would the IRS give it kickback and say no, and I don't know, provide some type of reason that they said no, or
they'll provide a reason. They'll provide a reasoning as to why they said no. But usually you don't get a kickback.
Okay. Okay. So now when we're thinking about, we got all our stuff together, our paperwork, when we're thinking about how we're going to be taxed, and we're going to have a whole session on credits and deductions. So this is just a high level question. What are some things as a new business owner, and maybe not even as a new business owner, a seasoned owner that's just been operating however they feel like they're operating, what are some things that they should be doing to track their business? So when it's time to do their taxes, whether they want to be the LLC, S Corp, C Corp, all they got to do is, put the stuff in a folder, give it to their accountant, and then they're good to go. What are some things that they should be tracking?
Girl, oh my goodness.
And we don't, but now remember, it don't have to be all of it, but let's say key items that every business should most definitely be tracking, period. New business, seasoned business, whatever.
Okay, so to cover all of them, you need to, the top 3 things, have a bookkeeping system in order.
Okay.
You need a bookkeeping system. You need a business bank account attached to that bookkeeping system.
Okay.
You need a bookkeeping system that is not Shopify, not Square, not PayPal, because these are not bookkeeping systems. I've run into that a lot, where everyone tracks their income, but no one tracks their expenses.
Okay.
They don't realize expenses are where the deductions come in.
Okay.
So you need an actual software, not the back end of your business, not the back end of your website. You need an actual software that is going to track your expenses and track your income. Preferably also something that you can upload your receipts on. That way, if you have a bookkeeper, an online bookkeeper, virtual bookkeeper, if you have an in-person bookkeeper, these receipts can just be uploaded on your phone to that bookkeeping software. That way, that bookkeeper can actually take a look at the receipts and match them to the transactions and easily reconcile your books on a monthly basis. So essentially, what I am saying is keep track of your books.
Okay.
Period.
Now, are there any bookkeeping software or programs that you would recommend that is beginner friendly? If someone is not in a place to afford the bookkeeper to do their books every month, but they're like, you know what, I can track this on my own. So then when I get to my CPA accounting at the end of the year, it could be with a bow on it for them.
Exactly. So honestly, I tell all of my clients from the beginning of your business, usually you're not able to afford a bookkeeper because some of us start at a minimum of $500 a month.
Wow.
So yeah, because it's a lot to do whenever you're handling someone's books, between reconciliation, making sure all of your information matches, making sure that your owner's equity is on point, making sure that you have all of your receipts, everything is adjusting correctly. So bookkeeping is not something where you just push a few buttons and call it a day. So that's why I tell all of my clients from the beginning, I'm not even going to offer you bookkeeping services, because I don't want you to have to deal with that amount at the beginning of your business. But as far as the software goes, I would highly recommend Quickbooks, because Quickbooks has a lot of different platforms where you can track your mileage. You can track your receipts. It integrates with your website. It integrates with your bank software. It integrates with a lot of things that you're going to use for your business, a lot of payment platforms that you're going to use for your business. The other one is FreshBooks. They offer the same exact thing as QuickBooks. It's just a different program. Wave is actually free, so you can use Wave for bookkeeping. FreshBooks, HoneyBook. What's another one? I believe Xero. That's the bookkeeping software also that you can use. So that's 5 different bookkeeping systems that you can use. If you don't want to use any of those, you can go on to the handy dandy Microsoft Excel spreadsheet. Make yourself a spreadsheet of all of the expenses that you have, all of the revenue that you bring in. If you're a pen and paper person, I'm a pen and paper person every now and again. You can go ahead and print you out some calendars. And you can track your income from it, and you can track, you can get a budget journal, you can get a budget journal, track all of your expenses, all of your income, and just keep all of your receipts in one area. If you want to do it that way, if you're not technology, what is it?
Savvy.
Yeah, tech savvy. Because there's a lot of people that are not tech savvy. So you can get you a budget binder together, keep all of your receipts in it. Track all of your expenses and income. You don't have to do it on a daily basis, but at least do it every single month. Literally sit down maybe 1 or 2 days and get all of your books together. This is going to take so much stress off of your tax professional, off of your accountant, off of your bookkeeper, because at the end of the year, if we end up having to do your bookkeeping for you also, you will be charged for it. So
it's probably going to be more.
Yes, it's going to be more to file your taxes if we have to deal with it. Because what we're looking for as tax professionals, we're just looking for a P&L statement from your business. We want your
profit and loss. Okay.
From your business. We may ask for a few receipts. If you have them, that's great. We prefer you to have receipts, but we're not going to calculate your receipts down. Okay. That if we do, that'll be an additional charge.
Okay. Another question about our tracking. What are some items that individuals don't think to track? Because people will track, like you said, maybe their mileage, but maybe not so much. People will track things that are tangibles that they can see, right? But what are some of those items that when you have your conversations with your clients to say, hey, how much did you spend on this? They haven't thought that that's something that they should be tracking for tax purposes.
A few of them would be marketing and advertising. That would be one of the main ones that a lot of people don't even really think about. The ads that you pay for on social media, the ads you pay for on YouTube, the ads you pay for on Instagram, for Google, all of this is a tax deduction. These are all business expenses. Another thing would be the software that you purchase for your business. The softwares that you purchase for your business are an expense for the company. Same thing as the equipment. So laptops, ring lights, the ring lights that we have to purchase for whenever we do live events, those are tax deductions. Any office supplies, those are tax deductions. What else? Your home office.
Yes.
Your home office. The square foot. Now let me break this down real quick.
Yes.
So people don't miss.
They're gonna do their whole house.
Not the whole house. So it'll be whatever percentage of the house, whatever square footage of the house that you use 100% for business can be written off for taxes. So for instance, if I have a 1,000 square foot home and I use 100 square feet of it, 100 square feet of my home is a tax write-off for my business. Okay. Now, with that, my utility bill, part of that is a write-off. My internet bill, part of that is a write-off. I actually have a business phone number, so that's automatically a write-off. What else is it? Internet, utility. I believe that's all utilities as far as water, electricity, anything in relation to me being able to use this office as my business office is a write-off.
Could repairs, so if I had to fix something, not if it was, not inside of the office, let's say I put a new roof on my house, would I be able to do that 10% roof space that's 100 square feet?
Now, that is I want to say yes, but that's a real iffy area. I'm not going to air that right now. That's a really iffy area. But if you do have to do repairs in your office, such as if it's a hole in the wall because you got mad one day, so you had to hit the wall, you can repair that wall. That's a write-off. If, for instance, you needed to, what else could you do?
Floors, maybe.
Yep, floors. Yep, that's a write-off. Anything of that nature to in your office, that's a write-off.
Okay. And then I just want to highlight so people can make sure that they're understanding what you're communicating. So when you were saying 1,000 square feet and then 100 square feet is what you're utilizing, that's 10%. So 100 is 10% of 1,000. So you will get 10% of your utility bill. So if your utility bill is $50, 10% of that is what you're going to get as a deduction.
Yes,
right?
ma'am.
Right word, deduction. And then anything else that she's mentioned, you will only get 10% of that. Now, obviously, if you only replace the floor inside of your office, then you'll get 100% of that cost. But if you redid, your entire home, then we're back at that 10%. Now, what happens if somebody has one cell phone and then they have one of those free numbers on their phone, a Google number? You have a Google number on your phone. How would you figure out your deduction for that? Or would it be one?
It is one.
Okay.
You would the same thing as your vehicle, because you can write off the miles. Your miles are a deduction. As long, I don't want to go into that rabbit hole, but yes, the miles that you use on your vehicle for your business is a deduction. Okay. So it would be the same exact concept. So with your phone, you have to figure out the percentage of your phone that you use for business. Okay. So you will take that percentage of your phone bill and you can write that off on your taxes. Okay. And after you write that off, you can create a deduction from it. Okay. And then another thing, because when I was operating my business full force, okay, now I was getting my deductions. Yes. If I'm eating and we talking about business, this is a business meal because this was, the purpose of us meeting. And then sometimes, I would travel, right? I wasn't traveling 100% for business. However, I was networking wherever I went. I was passing out flyers. I was letting people know about my business. So I was definitely hitting the pavement. So it was a mixture of business and pleasure. And then I was taking a percentage of, say, the hotel costs or my flight and things like that. Is that something, because I did not have a bookkeeper when I started my business, because no, I could not afford it. Is that something that, hearing it from how I was doing it, would you have recommended that to your client? Yes. Okay. 100%. Okay, good. Because as a matter of fact, for 2021, your food and meals for your business are 100. You can claim 100% of them. Oh, wow. So, yes, ma'am. So yes, your food and meals are a deduction on your business. So if you were to travel, let's say you going on a family trip, right? Yeah. And you were to meet somebody, y'all were to go to lunch, and it would be a business lunch or a business dinner or brunch, then that would be a tax deduction. You can write that off. if a percentage of your travel is for your business, you can write off that percentage. For instance, if you go on a business tour from state to state, every single state, the transportation to that state, the food, the beverages, unless it's an alcoholic beverage, the food, the beverages, anything pertaining to that business tour is a tax write-off.
Okay. So we can't deduct alcohol?
No.
Huh.
No,
but the government don't want us to drink. As much as the headache the IRS is, he don't think.
That is about to get even worse. But yeah, that's right. We cannot write off alcohol. I wish. Okay. That would be deduction. But yeah, we can't.
Okay. Yeah, so I know we're going to briefly go over the Schedule C. Do you think now is a good time? I think we've given enough just baseline information, and just letting you all know that we're going to have more sessions. I'm going to make sure, because I wrote them down, because since I'm not a tax person, I'll be getting some of the words mixed up, y'all. So
you're fine.
We're going to have a session on deductions versus credit. That's going to come up. Yes, then we're going to do employee versus independent contractor. Now, I do understand that from a legal perspective, but we're going to talk about it from both legal lens and the accounting lens. We're going to have a special trucking edition. So if you are in the trucking industry, I have a bunch of people around me that is in the trucking industry. It is like the hottest thing happening right now. If you ain't in it, you might want to think about getting into it, but we're going to talk about what that looks like from an accounting lens. And also we're going to circle back through all of the sessions and then tie it to the trucking edition. And we might have a fifth session, but that session will just be determined by any questions that we might have and if we need to have another session. But for now, I'm going to share my screen and we are going to just scroll through this Schedule C fairly quickly, high level, just so you can peruse it. We want you to be able to see it and understand it, because as I told Dorcas before, when I first started my business, I was just doing my taxes. Okay. I knew that there was a Schedule C somewhere, but I never looked at it because I was just like, oh, I'm getting a refund. That's all that mattered to me. But I do think it is important. I know how to read it now, but I didn't know how to read it then. But I do think it's important because, making sure that the numbers are making sense for you to have a better understanding and just to lay your eyes on this particular document, because I think most of us, especially from what I can gauge from the members in the group, you're probably going to do the LLC and you're going to have your Schedule C for now, but then you're definitely going to graduate to the other documents. And I don't know what all those are. To Dorcas to figure that one out, but I do know the Schedule C. So let me pull that one up.
All righty.
Okay, I think it is here. All right. Are you able to see that?
I see it now.
Okay.
All right. Put on the spot.
Yeah, so I'm like, if you just want to tell us things that we should be thinking about from each section, we don't have to go through all of the details, but again, just high level for individuals who have not seen it, or if they've seen it and they just haven't fully understood what it is they should be looking for.
Okay, so first things first, this is what we were referring to as the profit or loss from business. And you see underneath it, that actually shows sole proprietorship. So as a single member LLC, again, and Ms. Sammy can actually agree with me on this one. As a single member LLC, you're considered in the government's eyes as still a sole proprietorship because it's just you running the business.
Yeah,
that's the only reason it says sole proprietorship. So don't get upset when you see this.
You're like, I'm an LLC.
But underneath that, again, this is your Schedule C, and also it says Form 1040 underneath it because it's going to pass through to your Form 1040. So here on the first line, you're going to put the name of the proprietor. So that's where you're going to put basically your name. Okay. And then down here, you're not going to put your social, but you're going to put on line D, your employer identification number. This is why you have an EIN. Your EIN is for your actual business, connecting you to the business. So even though you don't put your social, your EIN is showing that you are the owner of the business because the EIN and your social are connected.
Now, what happens if an individual has not gotten an EIN and they're just choosing to use their social security number?
If you're an LLC, you need to have an EIN. There's really no discussion about that one. If I mean, it's
free in here now.
Yeah, it's free to get. I mean, it's really no reason why you should not have an EIN number for your business, whether it's a sole proprietorship or an LLC, because you really don't want to give out your own personal social security numbers to anyone, especially as an independent contractor. Mm-hmm. So now, instead of you having an EIN number, you're giving everyone your social security number as an identification number, and that's not separating you at all. So the EIN is going to help separate you from your business.
Gotcha.
And protect you. Okay, so you have your business name on C, and then you have your business address.
Okay.
Then on line F, your accounting method. So there are multiple accounting methods that you can use. So accrual based and cash basis. Cash basis is when you get the money right then and there, or you just accept the money, you put it in your books, it's right then and there. Accrual is you only log it as soon as when you receive it. So basically that is, oh Lord, I don't want to give you the whole spiel because it's a lot.
Yeah, that's enough. Remember, this is high level. They will reach out to you for the details. This is literally so folks can have an idea of what this document is, because there's probably going to be new business owners. Yeah. You know, I have new business owners that are around me. This is going to be their first year doing their taxes. Mm-hmm. When I did my taxes my first year, as long as I was getting a check, I was no mind. And I should have been. Right. So, but no, so we can, that's plenty. Most people probably doing cash versus accrual. Mm-hmm.
Exactly. So then the rest of it is pretty much self-explanatory from F through J. Now, when you come down to income, your income is basically all of the revenues that you brought in. So it's going to show the cost of goods sold, your gross profit. It's also going to have your gross receipts for sales. So your gross profit is going to be calculated as you see on the form.
Mm-hmm. So what is my gross receipts? What is it?
Your gross revenue.
My gross. So what's the gross? Is that everything before deduction?
Everything. That's every single amount of money that you brought in. Okay. It's kind of like if you were an employee. So your gross income is the amount that you made. Then you got the tax people coming and getting all your money. So now you have your net income.
Okay, so my gross, if my salary is $50,000, my gross is $50,000, and then if Uncle Sam takes 20, my net is 30,000.
Yep.
Okay.
So it'll be a combination of, well, for employees, it'll be your tax that's taken away. For business owners, it's going to be your taxes and it's going to be your expenses.
Okay. Got it.
All right. So that's part one, all of your income.
Okay.
So then you have part two. These are all of your expenses. These literally every single item right here are all tax deductible.
Okay.
So when you see part two and you get a letter talking about, hey, I need you to fill in this area on how much you spent with this. This is what we talk about what your expenses are, because all of these things can be deducted from your gross revenue.
Got it.
Okay. So
and then if it's deducted, I'm paying less taxes.
It's not necessarily that you're paying less taxes.
Okay.
It's more of your taxable income will be lowered.
Okay.
So your taxable income is the income that you have after all of your expenses.
Okay.
All right. So then if we come down through 28 through 32, that's just more of your calculations, where it's like your estimated it's your total expenses, then your estimated profit, which is right here on 29, which is says tentative profit. And then you have your net profit or loss on 31, and then you have another calculation on 32.
Okay.
Okay. So now you have your cost of goods sold. So essentially your cost of goods sold are the items that you need to use, or products or services that you need to use, or materials in order to provide the service that you're providing.
Okay.
So this is how that's going to be calculated. So you're going to have the cost of labor, the purchases less cost of items withdrawn. It's pretty much spelled out right here. And then you have your inventory at the end of the year. So say, for instance, you have a clothing boutique, right?
Okay.
So you have inventory with the boutique.
Yeah.
So you have the total amount that you purchased at the beginning of the year, and then you have the total amount that you have left. So what you have left is a part of your cost of goods sold. It's the calculation for it. Okay.
Gotcha.
Then you have right here in part 4, the information on your vehicle. So this is what I was referring to earlier. If you have a personal vehicle that you use for business, this is where it is calculated as to when the business was used for business, and then how much was it used for business, how much was it used for personal, and how much was it used for other. Then it's going to calculate it to show you what percentage you can actually use for your business write-off.
Okay.
And then down here you have your other expenses, and these are expenses that are not listed in part 2. These are just additional items that you can list, and then it'll total out on line 48. Now
when we think about other expenses, so when I think about, like I have dues that I have to pay every year, attorney's dues, would that be other, or is there a line item for that? Now, of course, I technically don't put that on mine because I work for somebody, so they're getting that because they're paying it for me. But if I have my own, firm, that would be something that's going to fall under this other expenses, any type of dues, or, if you got to keep up with some type of certification, possibly.
Actually, give me one second, because I believe it's actually further up that you have
what, probably professional dues or something, maybe.
No, because your professional expenses are going to be like your accountant, your attorney, your business consultant. Those are going to be like your professional services, where you see 17. That's where that's going to go. Then you have your other expenses where you see 27A. Right here. Then down at the very bottom, that's where you're going to list like your dues that you had to pay into. So for instance, with the trucking industry, they have membership dues. They have dues that they have to pay on a either monthly or an annual basis. Same thing for real estate agents. Ooh, we got a lot of dues. We have a lot of dues.
Listen, I pay more in real estate dues than I do to keep my law license. And girl, to me, crazy. That is crazy. Crazy.
It is. But if you work it, it's worth the investment behind it. When they start, and our dues are every quarter, and then on an annual, we have 2 or 3 dues on an annual basis, a due on every quarter, and then depending on what group you're with, you may have 10 daggone dues from that group.
From them.
So the dues,
I understand.
The dues are crazy.
When I first had to pay it, I was sitting there and I'm like, wait a minute, now the lawyer, Missouri Bar, wants this.
Yep.
These people want how much money? Trust and believe, I was getting every deduction for all of those dues because it was my own firm. The real estate portion was, but it was, it was a sticker shock, to say the least.
It is a sticker shock, especially when it's like your first year in real estate. You're just getting your feet wet. Then next thing you know, you got like 600-700 plus in dues,
and so zero homes.
Get this from.
I'm like, nobody bought a house from me my first year.
Exactly.
But I'm all these dues.
Exactly. But yes, all of like your dues, your memberships, and stuff like that are going to go in part 5. That line 48 is then going to be moved up to 27A. Once it's moved up to 27A, that'll be part of your expenses that you can write off on your taxes.
Got it. So let me stop sharing my screen. I'm going to make sure that we don't have any questions on Facebook.
Yes, ma'am.
Because then if we don't, then I'm going to have you discuss I don't see any.
Okay.
So if you can just, in closing, give us your information again. I'm definitely going to put it in the description box, in the comments. I first and foremost want to thank you again. This was definitely enlightening. I'm telling you all these next sessions, because it is tax season and there are going to be so many people saying that they can do your taxes. And if you are going to choose someone, always do your due diligence. Yes. Make sure that this is a reputable company, but more importantly, have a baseline understanding of what should and should not be happening with your taxes. Because once you pay somebody $300, $400, $500 or whatever the case may be, but you don't understand, like we just went over the Schedule C, just having that basic knowledge to know that, wait, something isn't right. You didn't have these other expenses in there. You didn't mention to me about, I don't know, the square footage of my home. Just making sure that they're reputable and they're well-versed and they're educated in this particular space. Yep. Which is what we're trying to help people with, Again, we're at the end of the video. Give a like if you got anything, even if it's one, because one thing means that you walked away with knowledge, and knowledge is power. Subscribe, please, because that does help these algorithms with YouTube that I barely know, but I heard they do. That it helps with the algorithms. And definitely leave a comment if there's questions that you might have, because again, there's going to be 3 more sessions. And it would be most helpful if we're able to see things that you have questions about that we can address. I know there's potentially going to be questions about the child tax credit and all of that. So maybe that will be a part of the bonus session, since it's not one that's specifically pulled out to highlight and have a conversation about, but we can definitely do the comments in this bonus session. With that, if you can give us your contact information again. And of course, we are grateful for your information.
Thank you so much for having me on. I enjoyed the entire time. It was not scary at all, like I thought it was. But if you would like to reach me, again, you can text me at 919-412-0122. Just text me taxes or business consultant or bookkeeping, any of those above, and we can get you scheduled. I'm offering free consultations all tax season. So just hop in my messages. Yes, that is a real number. It is 9-800 number. You will get me directly. If you would like to go check out my website is top tier, F as in Frank, B as in boy, S as in Sam.com. I have all of my information on there. If you want to check out my social media just to vet me, you can type in hashtag top tier FBS, just like my website, and you will see all of the information that I have given to social media or put on social media. Or you can follow me on any of my platforms at that same name, Top Tier FBS, just to make it simple for you. But you can reach me on any of these platforms at that phone number or through my website. And again, free consultations all tax season.
So what is the cutoff when you say all tax season? What is the last day that
April 15th.
Okay. Now, but what is, because I think last year, one of these years we got an extension. So if we get an extension, do they get an extension for your consultation?
No.
Oh, okay. I tried, y'all. You said no.
No, because it is, I would highly suggest if you want a consultation to book it as soon as possible, because my consultations and my time is actually being filled up very, very quick this year. So book it as soon as you can, and I will see you. And my consultations are via Zoom or phone, because I don't like texting conversations, because a lot of information gets misconstrued through text messages. So please, if you want to talk, schedule a consultation. It's not because I'm trying to sell you something. It's just because I want to have clarity in our conversation. So yes, please just text me and I'll shoot you the link, or you can just go on my website and you can schedule a consultation there.
All right, y'all heard it. A free consultation. I don't even do free consultations. And a lot of people don't. So you need to jump on this, because that's letting you know that she already know that she knows what she's doing. So she's gonna give you a free session so you all can really come up with a game plan.
Yep.
And make sure that your taxes are done right. So we are right on time at 7 o'clock. Look at that. Time out. So thank you all again for watching us. And we will see you all next Monday, where we will be discussing deductions versus credits. All right. Enjoy your evening.
All right. Thank you. Y'all have a great one. And I look forward to seeing y'all next week.
All right. Bye.
All right.